Okay, guys, let's start the seminars. Today is January the 2nd, right? Yeah, January the 2nd, 2012. Amazing. I remember the days of 1999, New Year's Day. Unbelievable. 12 years has passed. But well, that's how it goes, and that's how it's always been. So we're going to start the seminar. It's going to be very simple. Nothing has changed technically that have damaged or create a different type of environment. We still believe, and like I always say, I don't want clients to be on the wrong side of the market. And the worst can happen to anybody is being bullish here when this type of move happen. I know it's a trend around many traders to hold the stop and move the stops and open the stops, and this type of corrections are the one that take people accounts away. That's the reason that they are created. Move like this one and move like these ones, because you believe that the outtrend, in this case the dollar, is going to keep going higher, and you believe that that is going to bail you out, and you open the stop, and then that's dangerous. So we don't want anybody to be in that position, and we want to let you guys know why we are saying for the last 7 days or even a little bit longer that a correction of this magnitude or even bigger is about to happen. This is the US dollar index. Like I say, you can count 5 swings from the lows. 1, 2, 3, 4, 5. Now, like I say, and I'm going to repeat it one more time, this can be 1, 2, 3, 4, 5 as a leading diagonal. That's been the case. The dollar is creating a bottom, the dollar is creating a top, and a correction like it's drawn right here is going to happen pretty soon. Otherwise, like I've been saying, what we're ending here is A within Y, and then we're going to get a correction of this magnitude, not that big, and then the dollar is going to make another high en route to 82, 89, 83 area before the biggest correction. I'm going to repeat it to you guys one more time. No breakout in the dollar is going to happen yet. I mean, I would say that is a big percent that say that is either this path or it's going to be in a small correction, another high, and then another low right here before going higher. It's going to be one or the other, in my opinion. There won't be no breakout in the dollar for current level. This structure by nature is corrective. So with that in mind, I have to tell you, be careful with the long dollar. Every long dollar position needs to be with a very well-defined stop or risk, because we just update the 1 hour chart on the service, and it looks like the perfect storm is being there. I mean, every single US dollar pair either have the possibility of being nesting against the dollar or making a three-way to the outside. But I have no question in my mind that that's very close to happen. With that in mind, if you take a look to the 8-hour chart of the US dollar, this is the trick that I want everyone to follow. Okay, 1 second, because I'm switching this email here. Okay, very well defined. What do you have in the dollar? You have in the dollar, 1 second, it's not this chart, it's this one. Okay, what do you have? Do you have a very well supporting channel to the outside? A break of that channel to the downside means gains over to the dollar, means that the dollar then is going to end the correction. Like we have it here. what do we have? 3, 4, or 5? W, S, and most likely ending A or Y. I mean, I tend to believe that it's either the 5 or can be A, what is ending. And then from there, we should trade to minimum. Let's say that ended already. If it's A, it's going to trade minimum to 72.82 area before another round to complete the double zigzag from the lows on May the 4th. That's one scenario. I'm favoring the diagonal in some degrees because as a market correlation made more sense with the euro. Because for me, the euro is ending. Also, the euro is ending the D way. With the D way, what it was expecting in the euro is a 3 ways back and then lower again. So the euro is giving me the chance, since with cable, to a correction, a big correction. So, I mean, that's only a matter of market correlation. It can be the diagonal or it can be the euro. But I want every one of you to have this in mind. These channels, everyone should have it traced in the perform right there in the chart. If that channel is taken to the downside, the move that started right here around October the 30th ended in the dollar, and it's gonna do either this and higher, or it's gonna do a correction to around the previous 4 levels here and then higher. It's one or the other. I have no question in my mind. Now, the dollar in a 1 hour, this is what we have. Like I say, look, you're gonna get the same path in every US dollar pair. Either 1, 2, 1, 2, and it's gonna get everyone by surprise and make a low, or is A, B, C, W, and then it's gonna start the move to the outside. Remember, the move is correcting by nature. Send the lows on October the 30th, I believe. So how we laboring A, B, C, W, S, we got A, we are in the B. This is a 3-way move, so this do not need to be any impulse. It can come by bunches and rallies, and then rally, 3 rally. That's the case of the bullish case, of the bullish scenario on the dollar. The recovery in the dollar from the lows, if you take a close look, so far you have what it looks to be 1, 2, 3, 4, 5. I mean, it looks corrective in nature or nesting also, because I know how the dollar works. It makes the look that is corrective, and then you can say 1, and then you can say here like a type of flat here, a C, a flat within the flat, and another swing. It looks corrective, but I know how it works, so that's all I can tell you. It's a toss when it comes to the dollar index. Nothing it give you. The euro and the dollar do not give you a hint of what's happening right now. Now you can get a hint you can get a cruise for another pairs, and that's why the market correlation works. For example, oil, if you take a look at oil, oil did a very nice 5-way swing. This high here in the 4 hour can be either a flat or can be the first leg to 110 in oil, but also from the top it looks like a D, 1, 2, 3, 4, 5. I mean, it's calling for more. It's calling for I'm moving oil right here and then lower and higher in the bullish case. Otherwise, top is in place here and then it's gonna go lower. But at least it's telling you that in some degrees should trade lower due to the nature of the 5-way swing here. If this is B, and then should trade to 96 and higher, but it looks like also can do this, retest. That's why we have to stop on the dollar CAD. It's still at 101.21 because it looks like this can be possible. But I've seen oil before, and you see the structure here, and then it goes boom, and then you call it like a 1-2-1-2 and lower. So either wise, I believe that oil have a down move. That's why we still believe that the dollar has one more high on it. Very possible. You look at the 1-hour chart, everything goes in that direction. Now, let's move on to the other signal for a second. One second, let me switch here. There we go. Now, let's move on pretty fast to the euro. The euro is the same scenario. This is the euro in the 4-hour chart. It's in a place that nobody knows really what he's gonna do. In some degrees, all I know is that I know that the cycle in the euro is very close to the end. Why is very close to the end? Because the momentum indicator in the case of the euro is saying that the cycle is ending. There is a huge divergence, a bullish divergence on the euro. Look, that's a huge divergence on the euro. Still, in the 3-way move, you don't get. Thank you, Rafi. In the euro, in the 3-way move, you should end the move without divergence, even though this divergence comes from the last leg. But you see on the W here, in other words, you see on the first move how you got also divergence here on the A letter, on the A, right? There was divergence, and then they trade on the final push to the equal. That's how it goes in the 3-way move. At the end, it gives you the divergence, but erase the divergence at the last moment. That's what I'm expecting here. I'm expecting that this RSI push lower to these levels right here, but enough to see in the structure, and then from here push higher. I start likening 2780, 2769 as a possible final destination, but this is, enough to let me know that we ending a cycle that started at 142, and then the market should retrace back in a strong move. And then I don't want, like I say, nobody in the wrong side of the market. Every short, I know that the short is very popular on the euro, and I need to tell you, every short side of the euro that you take, a stop loss should be about that trend line. And please do not believe in the idea that it's going to trade here and lower. No. When this channel is broken, the minimum that the euro is going to correct is, let's say from there, minimum is going to go to 134, 135. Minimum. So do not believe in structures like it's going to go to 131 and lower. No, no, no. That's when that channel is taken, it's going to be a big correction in the euro. Now, if you take a look at the euro in the daily chart, this is what we have. What do we have in the euro? That we say A, B, C, W, S, W higher degree, S, and we can make the case that this is A, B, Z, that we end in the buff structure. Now, the equal legs of the structures comes at 125. So technically, that's the idea number, 124.49. I don't know if it's going to get down there without a reverse. Market all depends on the S&P. Now, what I know is that this move is ending, and then you come with the same idea or the same scenario than the dollar. Either the dollar is ending A. If the dollar is ending A, then where we are right now, this is going to become W, and then we're going to get back in S and make another low to 125, and then from there it comes the E wave to around this area. Let's say that it goes to 125, then it's going to correct minimum 124, 135. Let's say that this is W, then it's going to correct this move. Let's say that W ended at 127.62. Then he's going to correct to 134, 135, and lower. There is a channel here, if you take it here, that if the move have not ended and what you ending is A or W like this, then he should stay within the channel. And then you trace the channel here and should not pass, the outside should not pass that channel. So let me draw the scenario so you don't get lost in this. If the dollar is ending A, then the euro is going to follow this structure that is right here. It's what we ending is A in the dollar instead of the leading diagonal. Want you guys to understand that point. If you got any question about it, please ask me. Then the euro is going to do this. If what we ending is as A on the dollar, then the euro should do something like this, and then should trade lower to around the equal legs, which is 82.99 in the dollar, which is 124.50 area, more or less. Let me do it correctly. 1 second. Okay. So technically, if the euro, I know Rafi, give me 1 second. I'm going to get there now. If it can do this, and then from here, it's going to make a double correction. In other words, you get this one lower, this one lower. The idea is that the S&P looks like only got one move to the outside. So if that being the case, if you go then to the weekly chart on the euro, there is not this one, the other one. There is a trend line that comes since 2000 in the euro. Most of the people don't know about it because many people do not follow the long-time chart. But these trend lines can be a mark the end of the D wave in some degrees. That trend line comes now around 125.60, area. So, I mean, having said that, it's very hard to say which way it goes because nobody technically knows. All I know is that a crash to 114 won't happen from current level, in my view. I believe that is either this road right here when the D wave ended with the next low, most likely, and go higher, or what we ended right here is A. That all depends of the dollar. Now, if you take a look at the dollar, the leading diagonal, in my view, is the one that plays better. Why? Because if I end the D wave here, I know that I'm going to correct the whole move, this whole move, and the euro is going to recover. That's going to be a rally in risk on the euro. Now, that rally in risk, if you take a look at the S&P, what do you have in the S&P also? You have the scenario in the S&P when the S&P is bullish. I mean, I see a bullish S&P for 4 hours less. I believe that the S&P has a rally on it. Now, if that being the case and the S&P is bullish in this scenario, we got an A, we got a B, and we need a C in the most bearish scenario. Now, the S&P is going to rally to 112, 130, 1312, 1338 area before going lower. That means a rally. Yeah, that's possible. That means a rally in risk. And then if this is the scenario on the S&P, then the euro and the dollar is ending the leading diagonal, the euro is ending the D wave. Now, if the S&P is going to go into this route, and then the S&P, the euro is ending the A of the Y, and then that's going to allow from 1338 a 3 ways back, and then another rally. So who knows, guys? I mean, nobody knows that. Everyone can make their own decision, but I can tell you, nobody has the Holy Grail to say which one of the two. There's two scenarios playing out. They have the same result. At the end of the day, is a rally on the dollar. But you have to wait and see and play Elliott Wave hedging. Nothing else that you can do. Nothing else, to be honest with you. Now, the S&P in the short time frame, for me, it looks like tomorrow should be a lower day, and that's why we're favoring one more low in the euro. Why? Because we got 5 ways from here, 3 backs to the 618, and then we should trade minimum, we should trade tomorrow a lowest day to around 1244, and then from there start the beginning of the rally in risk. So that's why we're still favoring one more low in the euro. Now remember, there is that tentative, which is this one, which allow a biggest decline, consequently a biggest rally in favor of the dollar. If you take a look to the dollar CAD, you got the same result. You got a 5-way swing here. It looks like it passed a secondary low here, and then this recovery happened on Friday, and then it went back. This looks corrected, but I know the cat, you see the structure here, don't get surprised. Even 1 second to see the cat rally, and then you're going to labor as a nest. I know cat pretty good, right? And I know how he acts, but still there is a possibility that cat trade to 101.67 before going higher again. Even it's still the possibility. I doubt it that he can test here and going higher. But knowing that the S&P is already bearish and it looks like the S&P create a secondary low, I believe that the cap is going to be in this tight range until tomorrow when he break to around, or later break to around 101.67, and then going higher. This is the pre-market action and send the opening on yesterday. Now, cable, I noticed something on cable during the weekend day. If you take a look at cable in the daily, it is very interesting. Why? Because from the top, what do you have? You have a three-way move up to the low, which is right here. And then you have the rally in the S-way to the 618, almost 618 of the first leg right here. Now, what happened? This low at 52.72, if it's taken, that then is going to make 5 swings. It is corrected by nature. He needs a 6 and a 7. So it is possible that this is what happened in cable. It's possible in cable that this is the already, and then that we have A, that we have B in place here, and then that is going to come a rally to around here in cable before going lower. That's what is here, because if you take a look from here to here, there is three swings. If it makes another low, it's going to make a fixed swing. And this is, if this is a triangle in place, and then you're going to need a 6 and a 7. I know that the triangle can be in place as far at this low hole, but I don't know. I noticed that. So in the short time frame in cable, again, there is 2 scenarios. There is 2 scenarios. First one is this one already. This one is the one calling for another load in cable. But let's see if it holds about the 52.72. If it holds about the 52, if it doesn't hold, that's telling me that the dollar most likely is ending wave A. Then we're going to see a rally and lower, if that's the case. Now, cable can have found a low already last week, and then the count is this one. There is nothing wrong with this count, which it goes like this. And now can be nesting if the load is in place. How laboring is very simple. It labor very simple. A, B, C, W, S, A, B, C, Y. This is W, higher degree. Then you got the S. After the S, you got W, S, Y. This is a W. So, like I say, this goes with this one. And then you got 3 baht that goes with this one. And then you got a flat as a C-way, 3, 3, and 5. That's a 3-way structure from here when you have a double zigzag, and a flat, as a flat, as a C-way. Now, that's one scenario. If you see that the pair start trading higher, that should be the count. That's what we're showing you guys right there. Now, in a 1-hour chart, the cable, what do you have? You have this. Like I say, we're presenting as a favorite new low, but don't get surprised to see a rally in cable. What you have, we're saying, is either 1, 2, 1, 2, or this count, which is our preferred counts, which call for an ABC and the B-way and a move to the downside, because we know that risk is going to be off because of the S&P sometimes during the week. So keep that in mind. it can be both scenarios. Now, let me mention the cable. Look at the cable, I'm sorry, and the pound yens. If you take a look at the pound yens, the pair is ending a cycle. The pair is ending a cycle. Look, the divergence that you're getting in the RSI. So that's telling me that some degree or some type of rally in the pound is just around the corner. So be careful. Like we've been saying, do not over leverage or do not get too biased at this stage in favor of the dollar, because the bounce in the dollar is just around the corner, in my view. Now, if you take a look to this pair in the 4-hour chart, look, it's ending an A way. Right here, you got A, B, C, W. S is ending A. And then a bounce should come before another low. So, I mean, keep that in mind. That is happening there. I mean, I see divergency even in the 4-hour. So a bounce should take place in this pair very soon. And then if this pair trade higher, most likely the cable is trading higher too. Now let's get to the metal pairs. Let's start with Aussie. 1 second. Aussie, this is what we see. And we went very deep in this count the other day. We believe that it's bullish. In some degrees, is bullish. I see people labeling this as a 1, 2, 3, 4, 5. I don't like it like that. This is too big. I mean, there is no defined channel. And then if you take a look at the RSI, you see 3 ways here. And like I say, we should be ending with a new high. We should be ending A, and then a correction to hold this channel and going higher again. Because if you take a look, there is 1, 2, 3, and then you see how it broke below the B way here. That's wave 4. Do not do that. I mean, wave 4, do not do that. In other words, when a wave 4 should hold the channel of 1, 2, 3 in the RSI. So right here, it trade below. That's what I'm labeling as a S wave. Then we should end it right here, 3 backs and bullish again in road to, I believe 104 should be the target minimum of this pair, depending on how standard can be the case for the S&P. Now, the dollar yens. Yeah, let me see 1 second. Dollar yens, I mean, it's been, I hope that all you guys are short this pair. We've been mentioning since last week that the dollar yen was in the B-way triangle when you went in B-way triangle, and that should be trading lower. Exactly, that's what it did. You got A, B, C, D, E, and should trade lower minimum to either 75 or 676. If you hold the 76 area, and then it's gonna bounce back, and possible it's gonna break this high, and then we're still within the wave 4, and then the next rally lower. If you see that he break below this area, then he's gonna make the final low. He's gonna make the final low, and then he's gonna end the final low and then the pair is gonna rally accordingly. If you take a look, I like it like it's gonna make the low already, to be honest with you. Look, there is a trend line. This is on the daily. You can see the thrust or the bust, and he needs to make this low right here below this level to end a cycle that lasts years. After this coming low, I think it's done. And then a weakness in the yen should happen in almost every pair. Now, if you take a look at the weekly, this is when we stand right there. Look, this is an ending diagonal. Since 2008, it's been in an ending diagonal, and I believe that the bounce is, but this rally, look, this rally is possible, Rafi. This rally, the dollar is the leading pair here. I believe that it can take place when the dollar is going to become king sometimes in the next quarter. But this rally is coming in this pair. Now, the New Zealand looks exactly as Aussie. I believe that a new high is going to make the move here for a correction before another rally in the New Zealand. That's what I still see very possible, the dollar CAD to trade again just around 101.60 area before rally, because the rally on the C way of the CAD is this rally. Then the rally, the CAD is going to get weak again. So, or strong, the CAD, the dollar CAD should trade lower. So this correction is the one that is going to make us to make the peaks on the C way of the dollar CAD. That's what I see there. Okay. Okay, gold. Let's move on to gold for a second. One second, what is gold? Okay, this is the idea with gold. Gold, you have a three-way move from the top. Very clear. 1, 2, 3. A, B, C, D. A B way here, most likely as a triangle. And then you have this move to the downside. Now, this move was in 3. So the thrust from here needs to be in 3. If you take a look at the RSI, you already have 3-way. Now, the minimum 1532, 1522. The minimum target to the downside to the 3 ways is there. Now, it is possible that the low is in place. I don't like this so close, but like I said, guys, it is possible. Now, another alternative, the one that we're showing, that we ended A here, we're going in the flat B way to get to the 1435. Why do we doing that? Is because this move do not provide a single pit of divergence. So, and this is kind of big. I mean, in other words, this is no par of this decline. So we're labeling this as A, B, and we should get a rally in C before going lower. So far, there is a small divergence. Maybe this is the first leg, and we should get something like this before going lower. But the people that trade gold, my advice to you, this is a 5-way. Around here, you need to buy it. no matter what, against this low. Because it can be done. The minimum three-way target is there, in my opinion. So you need to start, people that trade gold need to start buying against any significant risk. But I'm favoring like A, B, and Z in a flat B way before the final push down. Okay, that's for gold. Another pair that is very interesting is the Aussie yen, due to the correlation with the S&P. Two possibilities: either end it here and then this was a double zigzag, or this is A, B with a six leg down. Now, this pair is well correlated with the CAD and with the S&P, knowing that the S&P should trade lower tomorrow. The way we like it is like this: A, triangle B, and then this decline in the in the Aussie yen here, this decline in the Aussie yen here is gonna be the one that makes the CAD to 103, S&P to 1244 before the recovery takes place in the Aussie yen. That's the way. We're probably gonna send later on a buy order in Aussie yen around let's say around 77.64 against the low at 76.95. This is a trade that if you raise 50 picks right there and you got it right, you're gonna enter around 77.56, and minimum you're gonna get it to 80.12. So that's a great, I mean, I already have my order placed at 77.56 in the Aussie yen to go long, and that's the same trade that is gonna take the CAD to the downside to 97, 98 area, and the S&P to 1300 or above. That's the same trade there. Okay, we add, if you guys, in case that you didn't notice, we add the Euro Aussie to the service. We used to carry it before, we took it away, and we just add it again. This pair, look, this is the daily chart, is coming out a triangle. Too early to tell which structure is taken. We see a 5-way swing here, and we see another 5 swing here coming to the end. Now, this 5th way is getting too big, so with that in mind, you gotta keep an extension, like anything's possible. We're going with the nest, but this pair is in the weekly chart that everyone knows. It has a target, in my view, of 114, and then from there the euro should be stronger than the Aussie. So a well-defined 5-way swing is a 5-way swing already with divergence there. So this should be, in this coming year, this should be a great buy at some point. Around 114, when 5 equals 1, can become a great buy. If you take a look at the small time frame, it looks like, now this is the euro, 1 second. What is the euro Aussie? Okay, right here. You see, this is a 5th way, and then from there, it looks like it did 1, 2, you see 5 swings here, and then 3, 4, 1, 2, 1, 2, 3, 4, 5. Take a look at the RSI, and you notice the divergence that is already in place. So very dangerous. Like I said, guys, all I can say is there is no guarantee. Nobody have the Holy Grail. all I can tell is I know that a rally, a cycle in risk off is very close coming to the end, and we should be ready to buy the risk on, and most important, we should be ready to sell risk when we notice that risk is coming to the end in the next cycle. Should be sold, because the next rally or risk off can be the real deal. I like buying Aussie yen. I like buying Euro Aussie after 3 ways, after 5 ways from the lows. I like buying Euro Pound after 5 ways also from the lows. Look, the Euro Aussie in the 4-hour runs like this. This is the first leg, the second legs, and then from here you can see 1, 2, 1, 2, 3, 4, a triangle wavefall right here, and then the last leg. You take a look to the RSI. This one here read 1486, the low last week 1545. So it looks like it have a little more downside. I like 124.97, 125 because this should be the final push lower before a recovery minimum in the next to around 131. The previous for 132 should happen, which is also the base or the weekly or the daily triangle. If you take a look, we found support around the previous 4 here. So after 3 backs in that area, this pair should turn lower again. Finally, let me show you the Norwegian krone, which you guys know I always follow when it comes to the dollar. All we know is that the long time frame, short time frame, 2 ways here. Either top in place, most likely top in place, or most likely the one that we're showing, which is A, B. All you got from the top is 3 ways. Either can be 1, 2, 1, 2, and top in place, or you have discount where you have W, S, A, you got a B, and then it's nesting to the outside to make a move to 610 area, 614, before then a big correction. But like I say, every US dollar pair is in a toss when either it's top or bottom already and is accumulating and tricking the traders, thinking that there is going to be more continuation of the trend, that the top or bottom, the top in the dollar can be in already. All I can tell you is that all I can say is, as far as you see those channels in place, you need to be buying the dollar, but with a tight stop. As far as the channel goes, I mean, if you have a big account and you can, in some degrees, take the hit, there is nothing wrong with sell this pair, for example, root around here or here against here, because if it take this level, then it's gonna go to 609. That's for sure. So that's what I see, guys. I say this. In conclusion, what I see is that the risk of trade is very close to the end. I still favoring one more leg due to the fact that the S&P is bearish for at least 20 points to the downside. Now, I don't know if those 20 points are going to be enough to make the next leg higher in the dollar. I mean, I don't know. That's what I see. But I see that looking at the biggest picture, the dollar can be ending a huge cycle, either a diagonal wave A or wave, I'm sorry, one diagonal wave A, yes, technically, because that's going to be either 1 or A in the weekly and daily chart, and then the biggest correction. Otherwise, the dollar is going to be ending A or Y, and then 3 bags and another high to 82.93, and then lower. That's all I can tell you guys. Looking at the whole market correlation things, I believe that most likely we are ending a leading diagonal. Why? Because the S&P, in my view, it has a rally still to 1344, 1308, 1333 area, and that rally is the one that is going to create the wave 2 or B in the biggest picture of the US dollar. That's my best guess. All I know is that the rally, the drop that started on May the 4th, most likely is ending in most of the pairs, and the recovery that happened in the dollars on May 4 most likely also is coming. Like I say, with a big account, a big fund account, you should be buying risk right now, in my opinion. But nobody here trade with that scenario. So that being the case, you should wait for 5 ways to start doing that. Look, this is the dollar on the weekly. We got 5 weight here. And then if this is 1, if it's going to be a flat, then this is 1. And then what we're going to get is A, B, and then 1. We should get the 2, and then the big recovery in the dollar. That's my preferred scenario, if that being the case. So that's why I see 5 swings coming out in the dollar, and I believe that 3 ways back. Now, right here is when you cannot miss it, because then you can miss the whole rally. This being choppy, dangerous, you can put anything on it. Right here, you should buy. Any question, guys, about the whole overall picture? We're going to try to do, not try, a quarterly report or annual report, so we can present to you guys what we're expecting for this year. Let's see if we can have it ready before the end of the week. And then we're going to put the target, what we see on the dollar, what we see on the euro, the majors at least, and we're going to provide you guys how we think everything to play out. As far as it, I don't understand sometimes the human nature, because it's very clear that you got 5 swings here. So if I was a dollar bull, I would say drop right now, because that's going to guarantee the low and consequently this scenario. So that's what I see right there. Look, you see the 5 swings from the lows. 1, 2, 3, 4, 5. That's on the weekly chart, right? You got divergence even on the weekly charts on the dollar. So that's what I'm favoring, the diagonal. And now let's say that topping in, you should get the biggest correction, say May the 4th, should take place within the next 3 months in the dollar. So I don't know what's going to happen, but something's going to happen. And then the dollar should trade back to 75.70, 76.63 area. So a 500 picks drop in the dollar. That can take place very easy. Otherwise, this is a flat, and then in that the case, if I see this, that's going to complicate things, guys. Because this is correcting then. And being correcting, there is no guarantee that this is a top. And then you have to open the door to triangles, A, B, C, ending diagonals. You have to open the door to everything. So if I was a dollar bull, I would say drop right now. And I know, at least I know that the dollar is going to be king for the next year, if that being the case. Any question, guys? I believe that the message is there that everyone should be ready one way to the other for a correction in the dollar. The degree needs to be seen. I mean, without bias, I cannot tell you guys anything. All I know now is that there is 5 swings. All I know is that as of right now, this is an important low. If this scenario happened with a low and a high, then this is not an important low anymore, because there is no guarantee that it's gonna rally. This can get sideways, like we've been mentioned many times, and we have to let you guys know about it. As of right now, this is an important low on the dollar. If it makes this a scenario, so there is no guarantee that this low will be taken, and then complicate everything. But the way that things are playing out, I'm seeing as a market correlation, most likely a scenario is that we end in 1 and we're going down pretty soon, pretty hard in wave 2 in the dollar, and the rally is about to take place like this. And the risk trade is going to rally for last time in probably during this year, and the dollar is going to do that. So we are there. Let's see what happens. So the cable, got it. Now cable, you got to take a look on this. If you take a look at cable in the weekly or the daily, let's put the daily first. You know you are in the sideways triangle, Ryan. So what happened is that because you are in the sideways triangle, every swing needs to be in 3 ways, right? So technically what it looks like that you got a flat right here when you have A, B, and C. So you have 3 ways here in cable. From there, what do you have? You have a recovery to the 50% of the whole move, and then you have another corrective move to the downside. 2 scenarios here. If you make a low below this scenario, you're going to see a 5 swing. 1, 2, 3, 4, 5. Now, 5 swings do not make a correction. So most likely you're going to get this and this, let's say. Now, with that in mind, ideally this trend line should hold, and ideally the 152 is the 618 of the D-Wave. So all you need is that as far as this low at 142.29 is in place, the triangle scenario is on the way. Now, if you are playing, this is something that people missed, and something that I don't get it. I don't want to sound bad. Bad for me looks amazing. Is this? If I believe that the whole world is calling cable in a weekly triangle, right? You agree with me right on there, right? The whole world is calling cable in the weekly triangle. If you see, I don't say you for you, I mean in general, if people see that you have A, B, C, and people see that this drop is corrective, how people's gonna say now how you're gonna be bullish dollar? Yeah, you can be bullish dollar in the short time frames, but you need to know that the famous crash will happen, because cable is telling you that this is corrective. And then if you entering a triangle in 5 ways, you need to come out of the triangle in 5 ways. You follow me? Now, what I mean with that is this, that no matter what it is, there should be a reset or a rally in risk to allow cable to drop in an impulse. You follow me? That's why there is two scenarios. Either this D ended here, and then we have A, B, and Z, or the D is going to stand, and then you need 7 swing. And then the D is going to look at it from around 148, 151, 88 area before going higher. Now, that scenario is the one that going to make the euro going to 125. And we are ending A of Y. But that scenario is the one that is going to complicate the things for the dollar. So for now, you have to wait and see. But you understand the cable, right? It's either from current levels or from 148, cable should rally. 150, cable should rally before low. Cable won't go lower to how it is, to 120, 123 on an extension 94. Unbelievable. I remember when I was trading cable at 2. Cable won't go there until this one of these two scenarios take place. It's very clear there. Now, if you take a look and your question about the pound yen, also is the same. Most likely, this is the weekly pound yens. Pound yens is either wave 4 ended here exactly in some degrees, because below 152.7 is going to make a fixed swing. 5 swings, you need a 6 on the 7. So 152.70 will define the count. So you got the idea. Now, look, no more answer that you're going to get for the pound yen. Why? Pound yen, it makes a new low below 118.85 already when it did this, 116. Now, pound yen can be in a type of flat. And then if his cable is going to rally, you can get this in pound yen and then lower when cable troughs of the triangle. What's happening is that this looks very corrective. It's either an ending diagonal, ugly, or it can be a flat. I know that a rally in cable, or in cable, I'm sorry, I keep saying cable, in pound, should happen against the dollar because the dollar is going to get weak. So, like I say, the most likely correlation scenario is that this pair is in a flat, most likely. You follow me? It's in the flat, and then the rally in pound is going to take this pair higher in 5 before going lower when pounds get weak and the dollar gets strong or whatever, and the yen. But the thing is this, that remember this, Ryan. The yen act as a risk, as a safe haven pairs also. So if risk is going to rally, most likely pound yen is going to rally also. And then it's going to make 5 swings. And then when the adversity comes to the market and the market trade risk off and cable troughs out of the triangle, most likely is when this pair is going to make the final push to the downside. Another scenario is that I like it like this, but this wave 4 also is getting very, very big. It's getting very, very, very big right there. It's already past the 2618 of the 13, which when that happens, I don't like it. Another scenario is that he entered correctly here in 3, and we are in the big wave flat. Doesn't matter. It's the same outcome when it comes with pound to get weak. So it's one way or the other. You know what I mean? That this is a three-way. You take a look at the RSI, this is a three-way. Now, maybe this is A, we're going higher in B, and lower in C. But it's the same outcome that cable does. You follow me? But like I say sometimes, I mean, people want to understand, I mean, that's why I don't get it that people don't use market correlation. Because market correlation is the key. I tell you, I told everyone, I always tell everyone, market correlation is as important as Elliott Wave, in my view. I will not know how to trade if I don't use market correlation. So that's what I see right there. Any other question, guys? Any other question that you guys have? I mean, another one is the euro pound. Also showing you the guys what's coming. Look. A huge cycle coming to the end. So it's the same. You got three ways from here, targeting 82.78. It went as low as 83. No, we don't carry silver right now. We used to, remember? We don't carry silver anymore. Any other question, guys, about any other pair? But I think that, let's not try to run before we walk. All we know right now is that a rally in risk should happen very soon. That's all we know, guys. Let's not try to outrun the market because that's not healthy. Outrunning the market is not good enough. I mean, doesn't make any difference between you and me. Let's see the recovery, how it goes. Let's see the magnitude of the recovery, how big it is. And then from there, we're going to draw a conclusion where we are. That's the way I like to see the market. Okay, guys, there is no more questions, so hope you guys have a happy new year and talk to you guys later during the day with the regular out days and everything. Okay? Thank you, guys.